gold. Few words carry as much weight, both literally and symbolically. For millennia, it has captured human desire. Shining in crowns, temples and vaults, surviving empires, revolutions, and economic collapse. It's been called many things. A safe haven, a relic, a hedge, a myth. But in every era, one question returns. Does gold still protect us? Or do we merely worship its memory? Long before the first stock or bond ever existed, gold was money. It didn't need governments or signatures. It didn't depend on trust. It was trust. Ancient civilizations used it to measure wealth and power. When kings negotiated, they didn't trade words. They traded metal. Gold outlasted wars, plagues and dynasties because it carried something no paper ever could. Permanence. For centuries, the world's currencies were chained to gold. You could exchange your banknotes for the real thing. It kept nations honest. They could only spend as much as they had in reserves. But in 1971, the United States broke that chain. The dollar was no longer backed by gold. It was backed by faith. In governments, in productivity, in growth, gold was set free. And since then, it has lived a second life, not as money, but as a mirror, reflecting our confidence or lack of it in the global system. When trust falters, gold rises. When people fear inflation, war, or debt, gold becomes the last argument that needs no words. But when optimism returns, when tech stocks soar and economies expand, gold falls silent again. Between 1980 and 2000, it slumped for 2 decades. From $850 an ounce to barely $250. Those who bought at the peak waited a generation to break even. But in 2008, as the financial world cracked open, gold began its long revenge. Investors ran from risk to refuge, from paper to metal. In just 3 years, it more than doubled. Then, in 2020, history repeated itself, only faster. Pandemic, panic, and printing presses. Central banks unleashed trillions, promising to stabilize economies. They succeeded at a cost. Inflation returned like an old ghost, and gold quietly climbed past $2,000 per ounce once again. And now, here we are, in a world still uncertain. By 2025, gold has reached new highs. Why? Because the story behind the metal hasn't changed. But the world around it has become more fragile. Central banks, especially in emerging economies like China, India, and Turkey, are buying gold at record levels, not for decoration, but for defense. They've watched the dollar weaponized through sanctions and fear that one day their own reserves might be frozen. So they're diversifying, trading paper promises for something no one can print. Meanwhile, inflation remains stubborn. Even as interest rates rise, people sense instability beneath the surface, record debt, slowing growth, and political polarization. Tech may dominate headlines, But gold dominates quiet conversations. It's the asset of last resort in an age where safe feels like a luxury. Still, it's not all glory. Gold has its cycles and its crashes. After 2011, when it reached almost $1,900, prices fell nearly 40% over the next 4 years. Investors forgot that gold doesn't produce income. It just sits and waits. When times are calm, patience feels like punishment. That's what separates gold from stocks or index funds. Stocks create. They represent innovation, expansion, growth. Gold preserves. It sits still while the world spins, holding its value when everything else breaks. Owning gold is not a bet on prosperity. It's a bet on uncertainty. Let's compare it directly with index investing, the modern favorite. When you buy an index like the S&P 500, you're investing in humanity's progress. Every company in it, from Apple to Coca-Cola, is a symbol of productivity, invention, and consumer trust. Historically, the S&P has delivered around 8 to 10% annual returns over the long run. Gold? Closer to 1 to 2%. The index grows with civilization. Gold simply waits for civilization to stumble. And yet, civilization always stumbles. That's why smart investors don't choose between the two. They balance them. They let stocks grow their wealth and gold protect it. One feeds ambition, the other guards against arrogance. Some people today say, gold is useless, it just sits there. That's true, but sometimes doing nothing is the most valuable thing you can do. When currencies crumble, when debt explodes, when politics descend into madness, gold doesn't panic. It simply exists. Let's not forget the irony of the current era. While young investors pour billions into crypto, the so-called digital gold, the oldest asset on Earth, quietly remains the most trusted. Bitcoin was born from distrust in governments, yet it swings 10% in a day. Gold was forged in the heart of dying stars, and it barely moves 10% in a month. Both promise freedom. Only one has proved it over 5,000 years. But gold is not infallible. When optimism rules, it sleeps. When interest rates rise, it often falls. When innovation thrives, it fades into the background, like a quiet elder watching his children build the future. Yet every time the world forgets him, something happens. A crisis, a conflict, a collapse, and suddenly everyone remember. So, how should a modern investor think about gold? First, not as a get-rich asset. Gold is not about returns, it's about resilience. It doesn't grow, but it doesn't vanish either. It's the insurance policy you hope you'll never need, but you're grateful to have when the storm hits. Second, treat it as part of a system, not a substitute for one. A balanced portfolio might hold 5 to 15% in gold or similar assets. Enough to protect you, not enough to paralyze you. Because if your future depends entirely on fear, you've already lost. Finally, remember this, gold doesn't change. We do. We print more money, build more debt, invent new assets, and each time we think we've outgrown gold, until the next shock proves we haven't. That's why central banks keep buying it quietly. Not because they're superstitious, but because they know how fragile confidence really is. Gold is the world's financial conscience. It doesn't preach or promise. It simply reminds us that real value is rare, that trust can vanish overnight, and that stability, like gold itself, must be mined, not printed. So yes, gold has its bad years, its long sleeps, its sudden awakenings. But across centuries, it has rarely betrayed the patient. It doesn't make you rich overnight, but it preserves the foundation upon which wealth can be rebuilt. When empires fall, currencies die, and systems reset. Gold waits, silent and untouched. Welcome to my channel. Here, we don't chase hype, we dissect it. We'll explore how old ideas like gold still shape the modern economy, how fear drives markets, and how wisdom outlives speculation. Because while gold may not always rise, it almost never fails those who hold it for the right reason. Not greed, but security. And in a world as uncertain as ours, that's worth more than its weight in metal.